Hello guys, welcome back to the channel. Today is Friday the 7th of October. So the UK pound today, or late last night, got hit 6% by a mysterious flash crash. Now, I don't know how much of you will be hearing about this. It's all over mainstream news in the UK at the moment, because obviously this is quite a big deal. Now, nobody really knows what is actually going on. They just know late last night at 11 UTC, the pound nosedived. Now it was up at $1.26 to the pound, and there's talk of this could be an algorithm glitch, this could be human error. But as we see, trading continued for the day of the 7th and took another slide down to its lowest point, they're saying, in 31 years. Even worse than the Brexit. And the question is, what has actually triggered this to come out? Now, there's a couple of speculations coming out via the media that this is because Theresa May, the UK Prime Minister, has announced that she will be starting Article 50 in 2017, setting in concrete that this Brexit situation is going to happen. So whether the market has finally started to swallow that pill, I don't believe it. If we look at the situation during the Brexit time, the pound took its dive after the vote and the outcome. There is something in the background that isn't being told to the people. Now, whether this is some form of algorithm gone wrong in the system, or whether this is some sort of derivative gone wrong in the system, or whether this is some sort of connection to Deutsche Bank and their precarious situation. Unfortunately, I can't give you any exact answers as to what is going on. But what I can do is I can show you something very interesting in the gold and silver markets. So if we first compare the US dollar in the gold term, and following on from my video yesterday about the silver smash club and the prediction of the 12 o'clock slams, in US dollar form, it actually took a rise during the 12 o'clock hour, but then continued on a slide down, as per the prediction. And the same has occurred with silver, remaining pretty flat and quite likely going to be ending on the weekly low. Now, if we take a look at the difference in the UK pound, and just remember this chart format. So let's check out the UK pound. Massively different. We had huge spikes, totally breaking through due to the devaluation in the pound. This algorithmic, Deutsche connected, derivative, or even Brexit realisation, whatever story, whatever spin, whatever lie you want to listen to, the truth always will be told through the precious metals, eventually. And as everybody always says, it is the barometer of the financial industry. Now, if this isn't a natural barometer to the drop in pound of 6%, then nothing is. But unfortunately, you have to understand that we are dealing with manipulators. And the disgusting thing about this shoot up in the value of gold for anybody who would have been holding gold in UK pounds, and anybody in the UK who is holding silver should automatically not lose anything in devaluation. They should be on the receiving end of fantastic gains. But isn't it funny how, in counter to this, the shockwave through the markets with this drop in value, it spikes and then gets slammed. Now, admittedly, it's at a higher position in value compared to the US dollar, but you can see they have shaved off half of the move by manipulation via the UK pound. So if the currency falls and the metals fall in value, what is the barometer? Guys, this is all just manipulation. Forget these numbers that is associated with the precious metals that you are purchasing and holding. Because this system is in a race to zero in the fiat currency. There's a lot of talk coming out of the Chinese yuan being backed by gold. This is the end of a dying system, the death spiral. All currencies are battling against each other. But it's amazing that silver hasn't caught the bid in similar terms to gold, because we know it's a hell of a lot easier for them to manipulate the silver market because it's so much smaller, and especially in scale of value. They can place the silver at £1 million an ounce, can place it at 0 with a flick of a button. But guys, the moral of this story really is, if you're holding physical metals during this cycle phase of markets, you will be laughing when they can't sustain this false pretense of a market. Following on from my other video regarding the digital implications, these bankers are at the end of their run. You'll have a huge amount of stockbrokers today, currency traders, making huge amounts of money, laughing. But think about all the guys that are requiring their currencies and purchasing powers in foreign fields. People that buy goods from European markets, Asian markets, China. They've just lost so much purchasing power overnight due to this inevitable crash that is looming. And guys, if you're not in precious metals, this is the exact reason why you need to be inside of precious metals. You need to start moving some allocation into them. If we add the loss in Brexit onto the loss of last night and today, it will be somewhere in the region of 13–14%. The pound has lost value during the course of the year so far. And I can actually feel the impact of this. And so will millions of people going on holiday this year. Anybody who is wanting to use their UK pound in a foreign form have just had money stolen from them, have just had purchasing power stolen from them. That's what these bankers do. They steal from you. They lie to you. They tell you, we're in a recovery. The markets have never been better. Well, how can we have a sudden 6% drop with no explanation? And if you convert that into a GDP purchasing power of the UK, today we have just lost billions in purchasing power. Due to a glitch? I don't think so. Something systemic is happening inside of the systems, and we're just going to have to stay tuned to see exactly how much Bitcoin are starting to increase in value. We have The Guardian coming out saying Britain is heading for a hard Brexit. Don't you find it miraculous how they take these massive tumbles and recover straight away? Now, either this is an algorithmic trade where they're just feeding in the input and output through a computer system to benefit off of a currency trade. And if that's the case, then they make a huge amount of money while it shakes the system's foundation to the core, because people lose faith. And what happens when people lose faith? They leave those markets. So we go into a Zero Hedge article on this. Quote, I initially doubted what I saw on my screen. Wall Street responds to a historic, quote, pounding, end quote. Today's biggest story was supposed to be the September payrolls. Instead, courtesy of a few wild algos, a fat finger and a deliberate attack on sterling during the most illiquid time in the day, it was the 6% pounding as sterling tumbled dramatically in the chaotic trading that included a flash 2-minute drop in early Asian hours and sustained falls in London. By morning, it had managed to recoup much of its losses. However, the selling pressure had continued and the currency appears unable to regain all of its losses as would have been the case if this was a mere fat finger. The sharp drop in illiquid Asian trading came amid worries about the UK's hard exit from the EU, accelerated by computerised trades. The pound fell more than 6% just after 7 AM Hong Kong time on Friday to as low as $1.18 from just above 1.26. But it took another dive in London hours and was down to just over 1.23. A what the fuck moment. But more interestingly, even in the drop itself, were Wall Street reactions to the pounding, and none was more indicative than that of Kenji Yoshi, a foreign exchange strategist at Mizu Securities, who told Wall Street Journal that, quote, I initially doubted what I saw on my screen, end quote. Quote, this is not something you would expect in a half-efficient market, end quote, said Ulrich Lochman, head of FX at Commerzbank. Quote, we have a liquidity situation, quick, call Draghi, which has eroded massively over the last few years, and policymakers have largely ignored it. All the regulation that we have in place, for a good reason, has the side effect that liquidity in the FX market is much more shaky and fluctuating heavily, and we have times when it's extremely low, especially in Asian trading, end quote. Quote, it's become more a fact of life, end quote, said Kay Van Peterson, global macro strategist at Saxo Capital Markets, PTE in Singapore. Quote, a lot of the risk takers that used to supply liquidity before are no longer there, the prop guys at the banks. That's definitely one of the key issues affecting the markets, end quote. Another quote, there was a complete lack of two-way interest in buying the pound on the way down, end quote, said Jeffrey Haley, a senior market strategist at Oanda. A sudden move in a very quiet time, not linked to any information, is highly unlikely to be due to an algorithm, end quote, said Lyle Pacula, Chief Investment Officer at Melbourne-based hedge fund AE Capital, which used automated computer programs to make trading decisions. Quote, in my opinion, the source of the run is likely due to a discretionary trader trying to push the market, end quote. So could this be someone like Soros guys who is trying to break the markets? Either way, it's someone close to the banking sectors, close to the trading computers, or has just sold a huge amount of UK pounds through some sort of trading platform which has plunged the pound. It's another quote. It caught the market wrong-footed and triggered a lot of algorithmic selling, end quote, said Hugh Killen, Westpac Banking Corp's head of trading for foreign exchange, fixed income and commodities in Sydney. If it's a fat finger or just algos, we'd probably never know why it has actually sold off, end quote, said Ryan Meyerberg, a portfolio manager at Janus Capital in London. Quote, there's no doubt that there is an electronic component to it, end quote. It goes on to say, finally, while nobody anticipated last night's flash crash, which stopped out countless cable longs, here is what much of the sell side said about yesterday's pounding, courtesy of BBG. HSBC, the money laundering capital of the world, keeps forecast at 1.2 for the pound against the dollar by year end and 1.1 by end of 2017. And guys, take these numbers with a pinch of salt because this is speculation to try and keep the markets positive. We know the markets aren't positive. We know what's happening to the markets. When have their expectations ever been realistic? They've always been revised later on, being much worse than they anticipated. Deutsche Bank expects the pound to revisit lows seen during the Asian trading session and keeps forecasts at 1.15 pound to the US dollar. I don't think Deutsche Bank are in any form to really comment. They're seeking financial aid to cover their books, which isn't going to happen. And that is clearly set up to be a perfect bail-in of the people's money. If you've got a Deutsche Bank, time to take your head out of that sand. So I'm going to leave it there, guys. But I have actually just spoken to a banking hedge fund manager that I know through a neighbour of a neighbour. And I spoke to her directly, and she was involved in lots of high-end things through London, dealing with hedge fund managing for London companies. She told me that a lot of her friends who are European traders are extremely pissed off with the UK and what's happening with the pound dropping, because it is affecting everybody through Europe with their international transactions. People are losing a lot of money, and what's on the back end of losers? Winners. And who's the only winners on this board game? Because they're going to be having to pump in huge amounts of currencies to prop up these markets to try and regain the pound standing. Now, she went on to tell me it's likely that the pound will not regain position and will just be on a continued decline now until Brexit is finalised next year and all the uncertainty is out of the way. Now, she has no more authority to comment on anything just like us. However, she has had internal experience with these markets. She's predicting that it will be a 1-to-1 ratio, and what you're better off doing is actually converting your money out of the UK pound and into dollars. But she doesn't understand gold and silver, guys. But that's what happens with all these currencies. All these currencies are battling against each other all the way down to zero. The US dollar will be the last one to implode because everything will flush back there. But to protect yourself now, get yourself into some precious metals. Try to talk to your friends and families about protecting themselves, because it is all of us that are losing in this battle. And this is just a battle over preserving wealth. And if people want to complain and say, "Yeah, but look at the pound. Yeah, but look at look at gold. Look at silver. It gets hammered." Yeah, but guys, that's an artificial hammering to suppress the value in order to make it look good against the hammering down in fiat currency. So it's almost reverting down to a stage where you have nowhere to run. That's the impression that they're trying to portray into the markets. You have nowhere to run. Wherever you put your money, you're going to lose it. But stocks are up. Put it in the stock market. At least they're going 1%, 2%, all-time highs. Trap. So people who wait on the sidelines. I'll see what happens. I'll leave it in the bank, and maybe I'll put it into a property. And this is all designed to ensnare the middle class. That's what this whole thing's designed about. It's not about the poor, because they've got nothing to lose anyway, other than their jobs and quite likely their lives. But from a financial point of view, they don't have much to lose. It's going to be the extreme destruction of wealth. And if you think that's doom and gloom, get your head out of the sandpit. You got to wake up and you got to smell that coffee, and you got to make preparations, because if you don't, you're going to wake up with nothing. And that's the reality of the situation. And for anybody out there who has purchased gold or silver, you guys have your head screwed on, while 99% of other people are running around with their heads cut off. So guys, I'm going to leave it there. Thanks a lot for watching, and stay tuned for the next show. Have a good weekend if I don't do any more. Cheers then.